Good morning, welcome to today's Trading European Open live here at the Live Trade Room. Now today is Monday the 8th of October and you're all very welcome. Just to give you a brief introduction in terms of what you can expect during the course of this trading session is that we trade the markets live with live capital. We're professional traders here, and what we look to do is to identify high probability trading opportunities across probably 18 of the world's largest liquid financial markets. So you'll see us looking for opportunities in foreign exchange, in commodity markets, and also the global equities. Now, what we look to do, and really is our focus, is once we've identified those high probability trading opportunities, we then want to look to execute and manage trades with a high degree of consistency and discipline in our approach. And what we mean by consistency is we have certain market conditions that are very much favorable to our approach. So it's those types of market conditions that we really look to identify. And then when it comes to the management of that trade, we want to make sure that firstly we look to mitigate risk as quickly as we can. So if we can remove risk on a trade, that's priority number one. Protecting your capital, especially in these types of market conditions which we've been experiencing for the last few weeks, is a very important skill for you to learn as a trader. And we have an approach which is based on looking to cut your losers short as quickly as possible and let our winners run. So you'll see when we have successful trades, you will see a significant multiple on any loss that we'll look to incur. And really, obviously, the name of the game for any trader is to generate consistent returns on a regular basis over the medium and longer term. So without further ado, if we could just start with our risk warning, please do. Of course, familiarize yourselves with the risks involved in trading these financial markets, and take note of the risk warning currently up on screen. Okay, so the first thing we need to do when we trade these financial markets is to do a quick overview of potential market moving news. The reason for this is just to be mindful of any potential news events that can impact either trades that you're already in or trades that you're about to take. So as we can look through, you can see that we can expect a light trading day today. The reason for that, it's a bank holiday in Japan, also in Canada and in the US. So we mix that with Monday market conditions, and we don't really have much in the way of additional news now for the rest of the day. There's nothing of any significance for us, so we can go ahead, trade these markets if we capitalize on some moves. There is some interesting developments kicking in the background. We obviously had the FOMC on Friday, although the headline, I'll take you back to Friday's news event. So one of the biggest news events of a calendar month would be the non-farm payroll. The growth of employment in the US is an important factor for us to consider, and we had the headline rate was much less than anticipated. We're expecting 185 jobs, 185,000 should I say, but we actually saw 134. Now there's some mitigating factors for that. Natural disasters is to name just but one. And the unemployment rate fell significantly, so there was expected to be an improvement on the unemployment rate from 3.9 to 3.8, but we actually saw a 3.7 figure. So actually the headline not that great, but the undercurrent, then there's some certainly there's a number of fundamental factors which are very supportive of the US dollar, let's put it like that. So we saw a bit of a jittery trading day on Friday initially. The dollar started to sell off, and then as in line with expectation, I guess, started to strengthen. So we started to see some opportunities across the board in the latter part of Friday's trading session. Now, that's very likely to continue going into this week when we trade these financial markets. So far, the idea of a stronger dollar is prevalent. So it may be worth looking for these opportunities as we go through the charts. Now I'll bring our trading platform currently up on screen for you. And what we always do on a Monday morning is kind of just have a generic look on weekly time frames, just to get an overview, because sometimes if you're trading small time frames, it's really hard for you to just step back and think, right, well, what direction are these markets actually moving in? And that's why Monday mornings we can just have a little bit of an overview and really prepare and plan for not just the session ahead, but the week ahead as well. Okay, so we can see we're on a considerable downtrend effectively, and that downtrend is still intact. So although we've had a few weeks of negative price action for the US dollar, you can see that technically we're still in this downward trend, and I can draw your attention to that. So we've had a bit of a pullback. We've had the extension further to the downside, creating this low. And what was the potential for a strong reversal was a break above the 118. But as we know, we had a strong rejection of that level. And now we're pushing down, pushing further to the downside. So what we can see between these two levels is a sideways moving market. The market is moving in this direction. However, we've got a low to start aiming for, and it's around the 112, the 113 level, and there's an expectation for this market to continue lower if it meets some of the near-term criteria. So we do have a weekly low at the 1465 level. I'll zoom in a little bit more there for you so you can see it. So we do like the idea of this euro dollar to squeeze further to the downside, so we're going to come back to this market on a 15-minute time frame. Moving on, we can delete a few of these levels now. Just to let you know, the purple levels are lines on screen, are intraday levels. When we're trading these markets, we tend to use these purple levels. So what we're seeing actually over the course of last week was a really strong pound, and even against a relatively strong US dollar. But what we're seeing now is actually a little bit of a rollover. We're really struggling to break this 132 level, just up at these highs in here. So we're currently experiencing a bit of a rollover to the downside. The pound has been very reactive to ongoing negotiations with regards to the Brexit discussions. So from a fundamental perspective, I guess there's every opportunity for the pound to continue to weaken. So we'll identify this as a good opportunity. Not much to see really with the dollar yen. Just come off the highs there, the 114.51. We're now back at the at this. There's a bit of a floor being created here. We have the weekly low at the 113.50 level, so we're just above that as things stand. So we really need to see a little bit more from the dollar yen for us to get into it. A 2-week really strong pullback in the dollar Swiss. So if some strength starts coming back in to let's say if some weakness starts to creep back in to the US dollar, then the dollar Swiss could be a good candidate to be pushing lower. So what we're saying is if there's dollar strength, it could be the euro dollar, potentially the pound dollar. Of course, if we get price action, that's a little bit more conducive, also the dollar yen. But if we get some dollar weakness, then we're primed for looking for opportunities to sell the dollar Swiss for these reasons. The dollar CAD as well could fall into that because we're just bouncing off its lows. So there's a couple of markets that we can look to trade in either direction, and I hope that's not going to confuse you too much. Hopefully it doesn't. So that's the dollar Swiss. Let's go into this so you can see that price action is just rolling over a bit at these highs, bit of strength potentially creeping into this market, into the Swiss franc against the US dollar, so this price could push a little bit lower from these levels. But there's definitely better probability trades if there is some certainly dollar strength coming in. There's a couple of more significant trades for us to look at. So it's just a case of cherry picking which dollar trades we look at depending on what's happening and where the strength and weakness lies. Dollar CAD, just a bounce back off the lows there of the 27.80 level. And you can see it's quite a strong pullback, and a lot of this is oil related as well. The oil market's coming off a little bit, and we're seeing the dollar CAD strengthen as a result. So there's a bit of a channel being created, as you can see. So we might be getting, well, if the price action starts to play out as things currently stand, the next move could be actually to the downside. So again, if some weakness starts to creep into the US dollar, this could be a prime candidate, but it would need to conform with the actual trade setup. We wouldn't be looking to sell it at these highs. We'd need to see a structural failure, maybe a break below this ascending level would give us maybe an opportunity to sell it if the oil market started to strengthen again for whatever reason. The Aussie dollar, last week, really strong week. We were selling it from below the previous week's low, which is around the 7,200. So we had some really good trades in there, and a couple of close misses as well. We've traded it numerous times over the last week, and they weren't all big explosive winners. And it just shows you effectively the volatility that is still in these markets, which do make these markets a little bit more difficult to trade. So we're just currently at these lows, as you can see, for the dollar, for the Aussie dollar. A break below the weekly low, the 70.44, would constitute a really high probability trade to continue lower. The New Zealand dollar is in exactly the same boat, really strong break beneath the previous low, and you can see the ascending level, which has been on these charts for a really long time, and we're able to capitalize on a sell trade around the 72.80 levels. So we're able to capitalize on a really strong move. Probably didn't capitalize on it to the extent that we probably should have done, but nonetheless we know that many of you were able to get into those trades and did very well off those trades last week. So very, very well done if that applies to yourself. The euro pound, they were no-brainer sell trades, so that's, I suppose, the idea behind it. We had a structural failure below the 88.48, so it gave us a really good selling opportunity on Friday. So you can see from a structural failure perspective, there's one, the market bounced, made a low, and there's your second one. So that was the level we were looking at for opportunities to sell, and got a really strong move on Friday down to the 87.77, which is the weekly low. So prone to a lot of turmoil. We're in a yearly, probably a 13, 14 month sideways moving market now. So do bear that in mind. The overriding, if you pull back from this market, we are consolidating. So that is the market conditions, and capitalizing on small moves in these markets is probably the way to go. Again, if we roll over to the 87.77 level, then they could give us more opportunities for this price to push down to the 86.92, which is in line with these levels down here. So do be careful still of the euro pound. It is quite a choppy and volatile market to trade. Moving on to the pound yen, we can see really here that there is the potential for a little bit of resistance creeping in around these levels. There's your downward channel and we're getting a pullback to this level. So if some yen strength starts to creep in, this could give us a good opportunity for this price to squeeze lower. It's just peaked above those levels, but nonetheless it could give us an interesting opportunity to sell at these highs, especially if some pound weakness starts to creep in. So we can look at this, we keep an eye on the dollar yen just to see which is stronger or which is weaker, and maybe either look for opportunities to sell the pound dollar or to sell the pound yen. So either way, we'll come back and have a look at these. So it's just a case of selling off these highs. That's really the idea behind the trade. And as you can see, over the last couple of hours, we've had a strong devaluation to the downside, but we can look into that shortly. Similar kind of situation, really. We have a really strong level of resistance, and we can then, even looking at the euro pound, and can see a bit of euro strength creeping in today. Maybe the trade is the pound yen, but we can and will probably continue to look at the euro yen. I guess the level that would need to be broke would be the 130.55 level to the downside. So we've still got a little bit to move. What we don't want to see is rejections like we've seen the last two trading days. You know, the price pushing lower and then a strong, sort of fairly strong pullback. So we're needing to see more from the euro yen. So maybe we just focus on the pound yen and see if that opportunity exists or not. Looking at the gold market, what you can see from this market here is we're firmly in a downtrend. All we're doing is moving sideways, so it's been a difficult market to trade for the last 6-7 weeks. It's just moving sideways right now, but we've got a strong expectation for this market to squeeze lower. Like we did at these levels. Obviously the range is narrower than certainly what we've seen back at these prices up here, but we still like this market to the downside. We're in it on a daily time frame, so we do expect this market to continue lower. So it's pretty tight price action. So going into this on a daily time frame, then this is what we're seeing. So we're seeing a lot of resistance around this 112.08 level, and that is where our stop loss sits, and we're currently breaking this level. So this is exactly what we want to see, and as a result could give us an opportunity to get into it on an intraday level as well. Look at this sideways moving market. We need certain conditions to be met, but if those conditions are met, then we will of course see this price continue lower. Okay, so that's the Aussie dollar then. So moving on to the oil markets, which have had an interesting couple of developments over the weekend. The US seem to be softening their stance on sanctions against Iran, and the Saudis have been ramping up production as well. So there is this impact on supply and demand. These markets are very, very fundamentally driven, but from a technical perspective, on a weekly time frame, we've had a really strong rejection to the upside. So this level in here is really quite important. Could this give us a strong move to the downside and a bit of a correction? Absolutely. So for that reason, we're going to look at this as a high probability trade. Looking at it on a daily time frame, we're currently in just a pullback phase below these lows in here, the 73.92. So I'll just get rid of this one. So we're looking for opportunities for this market to sell off below that 73.92, and we've got a weekly low back at these levels. So there's potential for this market to continue lower. We had a good sell trade in there last week off this high, so we're able to benefit from a good trade. I think it was on Thursdays. It must have been this candlestick here. So we had a really strong move. The market did accelerate in the latter part of the trading day quite considerably before bouncing back quite a lot, but as you can see, we've got this continuation roll to the downside. So we're going to continue that theme. I think it can represent a good high probability trading opportunity. We've come into these markets shortly, but you can see we're very close to actually closing beneath this level in here, the 76. So we prepare ourselves for that shortly. The bit of weakness potentially creeping in. We've had a gap lower in this market, and again a strong rejection. So could this give us an opportunity for some selling? Yes, it could. We will prioritize the US oil market instead, just because it gives us slightly better technical setup. We do quite like the idea of the S&P squeezing lower. As you can see, this is our weekly low in here, the 28.69 level, and strong structural failure. Although on Thursday we got a strong pullback at that level, but then on Friday we got a really strong continuation to the downside. Again, the pullbacks are quite significant in these equity markets, but off the back of the non-farm payroll, the figures have given the equity markets a little bit to think about in terms of the Fed's stance and the impact that inflation is having as well. So we're seeing a bit of selling creeping in, very likely to squeeze down for a second attempt to the 28.69 level. So we can certainly look, if we get to see some continuation in the S&P 500, we will certainly look for, see if we can get opportunities for this market to sell off. And we've had a long period of consolidation. Now we're rolling over to the downside. But look, do acknowledge the fact that we closed at a bit of a high on Friday, and we've gapped to the upside, consolidated, and now we're rolling over back to the downside. So we're getting some selling in the Dow Jones and also the Nasdaq. So maybe we focus on trading one of these. We're just suggesting that the S&P 500 could be a good option. We've been talking about the potential for this market to sell off now for a few days, and we saw that sell off on Thursday and Friday. Again, presented some really good opportunities which we traded on Thursday. There's our key level. We saw a nice break lower, and then on Friday we got some further continuation and a really strong break to the downside once more. So we can take note of this low in here, the weekly low, which is 72.93, and again a break below that level, we've got a nice little potential continuation to the downside. So I just want to draw your attention to the technicals behind this market. We've had sort of really strong levels, resistance at this high up here, which is what we were talking about, and there's our structural failure to the downside, and we're very likely to get these prices maybe even continuing just a little bit lower, these levels, before they have a number of other factors to consider. So as you can see, we're just potentially squeezing down to these lower levels. So in fact we're quite close to this one as well. So you can see the change, hopefully the difference in I suppose the market conditions, like even today on a Monday, and we are expecting a relatively quiet day. So if we get into trades, maybe we'll look to be a bit more proactive with taking profit if we get little moves. We don't really want to be hanging around in trades all day long today, so do bear that in mind. But you can see that there's so many sort of opportunities to look at across multi-asset class. It begins to formulate a picture in your mind as a trader in terms of what the market conditions are like, and the more opportunities you have, the better the conditions will be, the more traders will be trading them, the greater the volumes you'll see in these markets. So hopefully it'll fit in with that picture quite nicely. And then also the other market we were looking for opportunities to sell was the Euro stock, and we had a really strong break to the downside on Friday. So Friday, very, very profitable day. There was loads of opportunities to get involved with, and obviously that's really kind of why we look to trade these financial markets. And in fact, the last 2 or 3 Fridays have been quite positive and quite productive. So let's go ahead and we'll focus on the FTSE and the S&P to see what sort of moves we get in these markets. We'll also look at the oil market, the gold. So we've got a number of commodity and global equity markets to look at. And then on the foreign exchange front, we can have a look at the pound for continued weakness creeping in. We'll have a look at the pound, and I guess the euro, euro dollar, and the pound dollar as well. And these markets could continue to roll. So we've got quite a few markets to really look at, and maybe what we look to do is to trade the higher probability trades in these markets. So we'll just go ahead and we'll define these markets. So what we might do is, just to keep an eye on these markets, we might where's the dollar? There it is. So what we'll do for this session is pick our 4 markets on the left hand side in the foreign exchange, just to keep an eye on the price. So we'll come into each of these markets very, very shortly. Yeah, a bit of strength creeping into that market. We'll have a look at the Aussie dollar as well. So this is effectively our trade plan for the session. So it's just worth keeping a note of the, just to look at these prices. We'll zoom in a lot more. We'll come into these again in a little bit more detail. And the final one is the pound yen. So we don't normally have as many markets to look at, but I think it'll be important to keep a close eye on these markets and see which markets give us the better opportunities. I'm just going to post just quickly. Okay, so just posted just a little comment there in the chat function. So you would obviously need to have a YouTube account, very, very quick and easy to set up, and then you log into it and you can respond to any discussions we're having about these markets, and you'll be very welcome to join us, and maybe you even have markets that you're looking at yourself. So this is a great opportunity to perhaps leverage our experience in these markets and see if you are learning how to trade these financial markets, if we can assist in any way, then let us know. Euro dollar. So these are the 4 foreign exchange markets we're going to focus on, and what we'll do is we'll add our commodity markets. And again, oops. So we'll start with the gold market. We'll go into these in a lot more detail now very shortly, so you can, hopefully we can formulate a plan. And if we need to discount any of these trades, then we'll absolutely go ahead and do so. So let's stick the S&P in here as well. So that's the oil. the S&P just pulling back. As you can see, all these three markets here are just pulling back a little bit. And then finally, the FTSE market. So what we can see up on screen is we've got a bit of a trade plan. We will sort of go into each of these now, and we'll see what levels we really need to focus and concentrate on, and we'll hopefully start to discount potentially some of these moves, or some of these markets, should I say. So it's just important to just keep an eye on some of these are correlated markets as well. So having an understanding of those correlations, so we can see the oil market potentially squeezing lower. So let's go in and have a look at this oil market in a bit more detail. So we can see from the daily time frame that we're looking for a continuation to the downside, and there's a bit of fundamental news driving prices lower, so we do have that going for us. I'll just bring down this level just a little bit. So this market is really failing to close below this level, which is the 73.76 level, and if we get a close on that, in fact let's look at this on the smaller time frame as well. So on a 5-minute time frame, we are currently what we'll do is we'll just work with that slightly lower level, and see how this market performs against that price. So the reason why we don't want to sell it now is because we don't want to sell a bullish market. We don't want to sell a level of support, should I say. That's a better way to put it. So from a high probability perspective, it gives us that better opportunity for traders to continue to drive prices lower below the 73.73 and not above it. So if this becomes a floor, then prices are likely to push up from here, and if we get a flush lower, then at least we're looking to stack the odds in our favor when we trade these markets. So as you can see, it's just strengthening a little bit right now, so we can come back to that in a second. So we're getting a bit of bounce off this level. Let's go into the oil market, just see where we're at. So again, consolidated markets. Let's look at this in the 5-minute time frame. So we can see that this market is struggling to close below this level, currently up on screen. So we do have a number of consolidated markets, which is actually not a bad thing, because when we do get a break of these levels, they're likely to give us a strong impulse, either to the downside or to the upside. So that's the level we can look at for the oil market, is to see if we get a break of the 1195.68 specifically, and again the oil market below the 73.73. Let's go into the S&P and see what our plan of action is for this market. So we can see that there's a little bit of resistance or support coming in around these levels. So what I might do is just bring this level just down a touch. What we would like to see, I guess, is this market come back to somewhere like to 28.87. So what we would like to trade in this market is a bit of a pullback and then an opportunity to to sell this market like so. So we know that the markets, they don't sort of move in a linear fashion. They move by pulling back, and we can get in at these lower levels, but that's a kind of a lower probability trade. Waiting for the pullback and looking to sell at a slightly higher price is the high probability trade. And what you can do is additional, you could get out your indicators and you could look for retracements and all sorts of stuff, and it'll all fit into line. And from a support resistance perspective, then the 28.87 is certainly our level to the downside. So that's the trade we're looking for in the S&P 500. So let's go back to so what I'll do is I'll take away this level here and just focus on 28.87. So if we get a pullback to that level, that will become the level that we're quite interested in. Let's have a good look at the FTSE 100. Been in a strong downtrend since, well, certainly since the open. We've actually gapped higher and then flushed lower. So throughout the whole Asian session, the high probability trade would have been back here at the 73.91. So we would have hopefully still be in this trade to the downside, with the expectation for this market to squeeze below the 72.93. Skella Elvis, good morning. Are we currently in a trade? Yes, we are. We decided to keep the gold trade, which is actually through our capital growth webinar every evening at 9 p.m. So we decided to hold on to that one through the FOMC. We're in a few trades that we wanted to book in profit going into that FOMC number, and we took a few intraday trades on Friday off the back of the FOMC for some of our traders. So yeah, Friday was a very interesting day. We wanted to close it out before the weekend, just in case we opened up and things are retraced quite a lot. But in actual fact, there's continuation, you know, creeping in. So that's what we're quite interested in now. Good morning, Connor. I hope you're well. Yeah, hope you had a nice weekend. Yes, I did. Yeah, very eventful, or active, should I say. So there was a family gathering over the weekend, so that was nice. So yeah, very good. I hope you had one as well. So what we're looking at with the FTSE market is a break below the 72.93, and it looks like we're getting close to that level now. Let's see where we're at on the daily time frame again. We'd expect this market to continue lower. Maybe there's greater opportunity for a little bit of sort of choppy price action at these levels. So if we get in, maybe we just reduce our risk down for that trade. So that's the level we can look for. So it's always worth getting your trade plan together. Great stuff, Connor. Pleased you had a good weekend. So it's always worth getting that trade plan together to know and understand what you're looking to do, have an understanding of the directional bias, and then look to trade that bias with a high degree of consistency in your approach. So we're seeing that the FTSE is potentially looking to break below this level. The oil market is already breaking, or potentially breaking. So Okay, let's go into oil then. So we'll trade this market on a 5-minute time frame just to see how it performs at this level. Right, gold is extending lower quite nicely now. So we're getting a number of moves. A really strong move actually in the gold market. So just wait for the pullback now in the gold market. We'll see if we get some. Yeah, you missed the start, Skelet Elvis. So yeah, no problem whatsoever. So we are getting these moves now across all of these markets. So we're now getting the close. Below this level, so now it's just a case of timing. So you can see this level just sitting in here. It's the 1490 level. You could argue just a little bit below it. So I mean, what we're ultimately talking about is a bit of dollar strength creeping in. So that might be the move for the day. And that coupled with a selling oil market and global equities selling off a little bit as well. So we're talking about dollar strength, equity weakness, and oil weakness as well. And kind of it does fit with some of the... Right, so what we're going to do then with the what we're going to do with the gold market is we've had a really strong extended move. So we would like ideally to be selling just around these highs, but we actually got a really strong flush lower in a very short period of time. So now this market has decisions to make. Does it roll over to the downside straight away, or do we get a strong pullback? And if we get a strong pullback, then it become a no-brainer trade for us. Even to this level sitting in here. So that was the level that we were looking to sell this market. And as you can see, by the time we would have, that opportunity would have revealed itself, it already flushed lower. So either a pullback to the 1195 or actually a break below the 1193, 1887, and just a stop loss just above this little handle in here. Yeah, there's a number of bank holidays today, Connor, for sure. So volumes might be lighter than usual. So we're now below these levels, which is kind of where we'd want to be. There's plenty of scope in these markets to continue lower. A nice little push, maybe even down to the weekly low. Let's just see if we get a break below this level, and we might be able to. You see, we will be getting a pullback now. Well, not now necessarily. We might get a long flush lower, but okay, let's get into this to the downside and see if we can capitalize on a good sell trade in this. So it's just timing now. We definitely want to be looking for opportunities to sell the gold market, selling the oil market. We just need to see a pullback in the S&P. You see really nice kind of roll over to the downside, but we don't really want to be selling these lows because we're going to get a pullback, and we'd prefer to just wait for the pullback, maybe as far as the 3100, somewhere around there. So we can wait for the pullback in the pound. We've got quite a few markets to look at this morning, which is something we've not had for a little while, which is nice. So we want that pullback trade. In fact, so much so we'll bring it down in line. We'll just organize things a little bit better. So we're getting this oil market continuing lower, so again, want to get in on a pullback on some of these trades. Okay, so any form of pullback in some of these markets, we'll be really eager to get into them. With this slow grinding price action, they're primed for a pullback, and when we get that pullback, that's when we might look to get into these markets. Even the oil market, some kind of pullback, we can look to get into it. Maybe we will get aggressive moves, but like Connor suggested, really with bank holidays in the US, Canada and Japan, I think major economies, the markets will be a little bit lighter. But still sort of constructive pullbacks in these markets. The gold market could be the exception, because if we get a breakout trade, we've got a bit of a level to trade with. With some of the other markets, they're just kind of grinding lower without giving us that high probability aspect to our trades. So this is a 5-minute chart, and yes, we're grinding lower. We had a nice strong explosive move, and then we're grinding lower. So it's a fair expectation to look to wait for a pullback in these markets and see how we get on with those. So it's nice to see a number of really high probability trading opportunities start to kick in. Just taking note of the weekly low there. So this market has a little bit to do before we start squeezing down to those levels. So if we did get a breakout below the 70.42, we could potentially look at this handle here on the 70.63 level. So what we'll do just before, I suppose we pack up, because we do have our traders over at the live trade room, so we'll be switching across shortly, guys. You kind of want a constructive pullback, and we've got a lot of potential support coming in around this level, so we don't need to be jumping in to the euro dollar at these lows. We definitely want more constructive price action to work with. So very briefly, what we would like to do and what would give us the high probability trade, if I get up my pen, would be an opportunity to sell this market somewhere around this way. So what we're needing is a pullback, and then taking the market to the downside. With the Aussie dollar, it can be a little bit easier, looking for a breakout below this 70.42. So all these levels are quite important. Pullback, I'm afraid, in the pound dollar, ideally to this 3100. Same situation, I'm afraid, for the pound yen. Just a bit of patience required with a pullback to this level, and then a nice move lower. So that would be in keeping with kind of more recent price action. So we're looking for 3 pullback trades and 1 breakout trade potentially. we can look, if we get a break below this level, we can look for a breakout trade now on the gold, expecting this market to continue lower. With the oil market, we're just wanting this market to just even give us a shallow pullback. So what we'll try and do is see if we capitalize on a sell trade around the 73 level. We're a little bit below that, but we need some form of structure to be created to get into it. The S&P, we do want a constructive pullback. I think it could be an opportunity to get into this below this level, below the 72.89. So we have been in a kind of a long period of consolidation. So no kind of rush with some of these markets, even though it looks like they're breaking lower as things stand. So let's zoom in. So again, we've got. Let me just tidy that up. So we've got one breakout trade, which is the Aussie dollar, potentially below the 70.42. We've got 3 pullback trades. So it's just being a little bit patient with these ones, back to these levels. Back to those levels, and then we can potentially look for breakouts in the gold market below the 1193.87. Yeah, and the gold market, the oil market, we need a little bit of a pullback in that one, and a breakout below the FTSE at the 72.89. So Monday morning, we've got lots of opportunities to trade. It's just a case of now focusing on our execution and trade management. So we've identified the high probability markets. We're very likely to see prices push lower in all of these markets over the course of the day. So let's see how this trading day unfolds. I do apologize, guys. We need to wrap up this trading session now. We do have traders over at the Live Trade Room, so we're going to be switching rooms. Please do feel free to join us if you'd like to. We're still offering a 14-day free trial, so do take advantage of that. We offer over 76 live trade rooms per calendar month. And if after the 14-day free trial you would like to continue your membership with us, then it's just a charge of $9.99, just contributes to your access to all of those webinars, and there's no strings attached, there's no contract of any kind. So hopefully you'll find it a little bit of a no-brainer to join us. So on that note, guys, thank you very much for joining us. What I'll do is I'll take this off screen, and we'll come back to these trades now very shortly through the Live Trade Room. So feel free to connect with us, subscribe, give us thumbs up if you can. If you've enjoyed this recording, we'd appreciate that. And you can also connect with us through and subscribe to a channel, of course, through Facebook, Instagram, Twitter, and LinkedIn. The details are all there up on screen. So thank you very much for joining us. Do take care, and we look forward to seeing you next time. From everyone here, take care. Bye for now.